Hello, everyone, and welcome to another episode of Selling Greenville, your favorite real estate podcast here in Greenville, South Carolina. I'm your host, as always, Stan McCune, realtor right here in Greenville, South Carolina. You can find all of my contact information in the show notes if you need to reach out to me for any of your real estate needs. And just a reminder, as always, please like, rate, review, subscribe to the show. And that's the way that you support it. Make sure you don't miss future episodes. So please do that when you get the opportunity. Today, I am going to be sharing my screen as we look at the monthly indicators, what used to be called the market stats for the Greater Greenville Association of Realtors. And there's a lot of interesting data in the data that we have going back to last month. So this is April's data, or through the month of April. And I'm just going to stop. Or I'm going to start rather. I feel like I should be stopping. Today was leg day at the gym. I am tired. It's like it just sucks everything out of me. Nonetheless, I shall prevail and go through these monthly indicators with you. So right at the top, new listings data was up 16%. This is the largest year-on-year increase that we have seen, and it is once again last month. When we looked at the March monthly indicators, that was a new record for new listings for 1 month. April beat it. April, we had, for the first time ever, over 3,000 new listings in 1 month. That is insane. That is absolutely insane. For comparison, post-COVID, it was not uncommon for us to not even break 2,000 new listings in 1 month. So a lot of people are deciding that they want to move. I'm sure, there's a lot of new construction in this data as well. Builders that traditionally don't use the multiple listing service that are finding that they need to list their inventory in the multiple listing service to move it. And so this is what's happening. 3,031 new listings for the month of April, a 16% increase from the 2,612 that we had in April of 25. Pending sales were up 9.9% year over year as well. So another very strong pending sales number and another new record. Okay, this is the second straight month, similar to the listings data, that we have had pending sales set an all-time record for most in 1 month. So 1,927. We've never broken 2,000 in pending sales. And what's interesting is, usually the month of May, we see a drop off. We that's when we start to see pending sales drop off. But we're so close. We're so close to hitting that record of 2,000. I would really, really like to see us do that. I don't know if it's going to happen, though. I think we might have to wait for another year to see pending sales eclipse the 2,000 marker. But after a slow start to the year where January and February were both down year over year in pending sales for the first time in a long time, now we've had 2 really, really strong months. And I just think, we talked about back in January, February, how the weather was a big influence on what was happening. We had multiple snowstorms. We had a few pockets of power outages and whatnot. Nothing like, what we went through with Hurricane Helene. But now we're starting to see, I think we're playing catch up in the data. It's become a very strong spring season. And I've seen that personally. So March was up 11.5% year over year in pending sales. April up 9.9%, nearly 10%. And so that was it went from 1,753 pending sales in April 25 to 1,927 in April of this year. Closed sales. This was one that has, been an interesting thing to track, right? Because we had 3 straight months of negative year-over-year closed sales data. And I told you guys, I believe, last month, that I expected that to flip for the month of April because of the strong pending sales numbers, and that's exactly what happened. We finally had our first positive year-over-year in closed sales, and it was a pretty big one, 6.4% increase year over year. So it was 1,640 closed sales. It's not a record of any sort. The all-time record came actually last year. What month was that? January, February, March, April, May. May of last year is the record for most closed sales in 1 month. So we'll see what May of this year ends up being. But it went up from 1,542 closed sales in April of 25 to 1,640 in April of this year. And because of the pending sales data being very strong, I would expect the May data to come in very strong as well. Now, that being said, May of last year being such a high bar to clear, we'll probably go back into the negatives again. We'll probably see, when this month closes and early in the month of June, when I get these market stats, we'll probably find that May of 2026 ends up having fewer closed sales than May of 2025, simply because May of 2025, like I just said, was a record month. But we'll see. It's hard to say. It's hard to track. We had a very, very strong May, June, and July of last year. And so perhaps that trend will continue from a closed sales standpoint. Now, days on market, very interesting story here. We peaked in February with 71 days on market, which is a little bit, on the high side for this area. But every month we've been going down since then. So March was 63 days on market, and now April went down to 57 days on market, and our 12-month average is 55. So we're pretty close to that. But how did that 57 days on market compare year over year? It was an increase over the 49 days on market of April 2025. So we're still trending, and if you're looking at the dot plot, you can see that we are trending quite a bit higher than the past several years in terms of how long it's taking for homes to go under contract, and not tremendously higher, but a little bit higher than even pre-COVID, the years leading up to COVID. So it's taking about 2 months on average to get a home under contract in this market. However, that number peaking in February caught my attention, because if you look at most recent years, so the vertical lines are the Januaries. So I'm not gonna count these weird 2021, 2022 COVID years, but 2023, the month that peaked was the month of March. In 2024, the month that peaked was February. In 2025, the month that peaked was February. But you'll notice that when it starts to come back down, it's not usually usually from February to March is not a huge decrease. And sometimes we have a bigger decrease from March to April in terms of days on market. But we had a pretty big, that decline from 71 days on market in February to 63 in March was pretty big. And from 63 to 57 from March to April is pretty big as well. So that to me tells me, that the market was starting to really slow down a bit at the beginning of the year. But again, what the data is telling us is that for some reason, the market just needed to play a little bit of catch up, whether that was the snowstorms, whether that was just people's needing to kind of get back in the sense of things, whether that's related to the economy, who knows? It's hard. Sometimes I can feel pretty confident that I can reverse engineer what's happening in the data. This is, and some of these, I'm not sure yet. I'm still tracking the data and still kind of forming my opinion. Median sales price was absolutely flat, okay? So the median is what we typically look at to determine kind of what is the standard sales price in the greater Greenville market. Well, that number is flat at $315,000. That's exactly what it was April 2025. And so if you're a buyer, that's great. That's great news that, not seeing tremendous prices skyrocketing. Now, I always have to warn you guys that what this data doesn't show you is that the median sales price is mostly going up for existing home sales. It's new construction that is seeing prices either flatline or go down. I'm going to show you guys this again. If you're watching on YouTube, you'll be able to see this. I'm going to pull this out. So I'm using, I've got InfoSparks pulled up, which is another data source that the Greater Greenville Association of Realtors provides for us. And InfoSparks actually has the median sales price a little bit higher, $320. And again, the way the numbers are pulled, between these two data sources is, you know, the data is not pulled exactly the same way. Okay, so just be aware of that. But you can see here that previously owned existing home sales are at 320,000 in InfoSparks, new construction at 308,000. How did that compare to April of last year? It was previously owned was 308,000, new construction was 321,000. So it's literally flip-flopped, right? Existing home sales a year ago cost 308,000 on median, and new construction costs 321 on median. Now, new construction is 308 and existing home sales is 320. All right, so this is what I'm telling you guys when I tell you guys that that new construction is what's bringing the price down. That's literally exactly what's happening. And so let me see actually real quick here. If I go back. Okay, and actually InfoSparks, when I look at the entire MLS, it actually matches exactly what the market stats have. It has $315,000. If you want to be technical, $314,950, but $315,000 as the median for the market as a whole. So again, if it wasn't for new construction plummeting in the way that it has the past year, we would actually see market appreciation. So if you're a home seller, don't freak out. Don't freak out. Unless you're in an area that has a lot of new construction, then you might want to freak out. You need to absolutely take that into consideration. Now, the average sales price typically goes up, and that is exactly what's happening. And that's because we've just got a lot of more expensive real estate in the upstate now than we ever have. And that just bolsters the average to be a higher number. And so I don't put a ton of weight into this, but the trends are what's important, right? We've had a consistent upward trend. And so year over year, the April average sales price was up 3.8%. It went from 387 and change to 401 and change for the month of April 2026 versus 25. Percent of list price received went up ever so slightly. It went up 0.1%. Now, this is pretty normal for this time of year that buyers get more aggressive during the springtime and start offering closer to what a home is listed for. 98.7% is what the percent of list price received was. So, if a home is on the market for $100,000, which you don't see very often anymore, a seller can reasonably expect to get 98.7% or 98,700 for that $100,000 house. This does not include seller concessions, so there might be seller concessions as well. But that's actually a higher number than what April of last year was. So buyers are getting a little bit more aggressive, and or sellers are getting better at pricing their homes. Housing Affordability Index had a nice little rebound back up to 100. That's really the lowest that we want that number to be, because at 100, that means that the median household can afford the median priced home based on current income levels, based on current home prices, based on current mortgage rates. Now, I'm a little bit surprised. April of 2025 was 100 as well, so nothing changed. I'm a little bit surprised that this isn't over 100 because incomes have gone up. We just showed that the median home sale, the median price for a home sale is flat, and mortgage rates are lower than they were a year ago. So I'm a little bit surprised that it stayed at 100 compared to last year. But regardless, I'm just happy that affordability is basically clearing the lowest bar that we're trying to clear, which is to be at 100 or higher. Inventory of homes for sale, we surpassed 6,000 for the third or fourth time ever in history. So we had 6,006 at the end of April, 6,006 homes for sale, a 21.6% increase year over year. That's a big increase, but that's not as big as what we've seen in prior months. So we're starting to see the past couple of months we've been in the 20% in terms of increases. And prior to that, we had been in the 30s. So does that mean that maybe we're starting to reach that point where inventory is starting to top out a little bit? Are we hitting? It seems like we're kind of hitting a wall around 6,000 units. And again, I'm not entirely sure. I don't have like a great explanation for like why that is. During the Great Recession, we got up to around 8,000 units at one point in 2010. That would be crazy, right? If we added another 2,000 units to what we currently have, that would be a lot of inventory. But I'm wondering if this trend is going to continue, because typically we do see inventory start to go up this time of year, and I would expect that to continue based on the new listings data. So it'll be interesting to see if we set a record, perhaps in the month of May, June, or July. I think at some point this year, I suspect we'll set a record if we got up to 6,100 units of inventory at the end of a month. That would be a record for the greater Greenville market since 2012. Now, if you want to include the Great Recession data in there, be my guest. All the other ones that I've said were records going back as far back as I have the data. This would be, if we got to 6,100 units, would be a record since 2012. So I do need to hedge that. Last but not least, month's supply of inventory. This is really important, right? Because we're talking about inventory being the highest that it's been since 2012, 2011. But month's supply of inventory paints a very different story. We're at 4 months supply of inventory. That is a 14.3% increase year over year from the 3.5 months of inventory we had last April. But that is very much in line with pre-pandemic, pre-COVID, and all of that. And I've been telling you guys that, if we get to 4.5 months supply of inventory, that's probably where we start to feel like it shifts from a seller's market to a buyer's market. I'm a little bit surprised, given all of the other things, that this ticked up to 4 months of supply of inventory. But I think a lot of that just has to do with just how many new listings that we had, right? We've had 2 straight months of record new listings. And so it doesn't come as a huge shock that month supply of inventory went up with that. It's just a matter of looking at the absorption rate, in terms of how many homes are going under contract, and making a calculation off of that. What I'm curious to see is whether this continues to kind of hover around there, or, which direction it goes in. I feel like the market right now has quite a bit of buyer activity, so I could actually see this number coming down. But if we keep having 3,000 listings a month, I think this number very much will go up. And if it goes up, we could find ourselves in a buyer's market pretty fast, in my opinion. So it's a lot to track. And we've got mortgage rates doing some odd things, right? We had a really bad inflation print that came out this past week. That then drove bond yields up, which then impacts mortgage rates, cause mortgage rates to go up. They're not going in the right direction right now as a result of the war, as a result of gas prices, as a result of inflation, and all of those things then influencing the bond market, which then influences the mortgage market. You guys keeping up with all of this? This is all important. What's happening in Iran affects your mortgage rate. Okay, you've got to understand that. If you don't understand that, then you're not an informed voter, because when November comes around, you might want to be taking into consideration what's happening. Maybe not, maybe you don't. But those are things to consider in all of this. We've got a new Fed chair now as well, right? We've talked a lot about Jerome Powell on the show. He is no longer the Fed chair, but he's remaining on the Federal Reserve as a member, I believe he's still a voting member. And so at some point I'll probably have to do an episode on that. But long story short, the person, Kevin Warsh, who's now the Fed chair, there under no circumstances can he lower rates in this environment. It's not going to happen. So if you're hearing people out there say, oh, mortgage rates are going to come down because there's a new Fed chair in town, tell them that they don't know what they're talking about, and they need to listen to the Selling Greenville podcast, because we told you what would happen. I told you what would happen. So that's it for today's episode. Thank you guys so much for watching and listening. Please like, rate, review, subscribe to the show. If you need a realtor in this market, my contact information is in the show notes. Thank you guys so much. We will talk again next time.